nvidia Corp. reported full-year earnings Thursday that validated the huge increase in its stock price over the past 12-plus years, but the final piece of the bull theory is still in neutral until at least later this year. nvidia's NVDA 4.93% numbers were eye-popping, especially for a company that has been public for nearly 20 years and experienced an annual sales decline just 5 years ago. The key numbers for nvidia's 2018 fiscal year: revenue increased 41%, profit increased 83%, yes, that's GAAP, and gross margin increased by 110 basis points. Those numbers were just part of another impressive quarterly report for the chip maker, which sent shares up more than 7% in late trading. nvidia stock has already gained 83.4% in the past year, while the Dow Jones Industrial Average DJIA 4.15% increased 23.9%, and that rise came on top of the biggest gains on the S&P 500 index SPX 3.75% in 2016. nvidia's ride has been fueled by greater demand for its core product, graphics chips, which have found a home beyond video games thanks to their usefulness in machine learning. The general bull theory is that nvidia's core gaming business will continue to grow thanks to the rise of esports and more graphically-intense video games, while new businesses selling chips for servers and autonomous cars will eventually be huge. With its fourth quarter report, nvidia d up to two parts of that theory. The core gaming business, which has been boosted by demands for those same chips in mining cryptocurrency, grew nearly 36% to more than $5.5 billion in revenue, more than nvidia's revenue total in any year before the previous one. The server business, meanwhile, came close to $2 billion in annual revenue, after failing to touch $1 billion the year before and mostly failing to exist before that. The one laggard so far is the automotive business, which declined sequentially in the fourth quarter and grew less than 15% for the full year. The results were below analysts' average expectations for the second quarter in a row. Chief Financial Officer Colette Kress said on a conference call Thursday that nvidia automotive sales fell as it ditches a long-time business of providing chips that power in-car systems to next-generation auto supplies. The sequential decline reflects our transition from infotainment, which is becoming commoditized, to next-generation AI cockpit systems and complete top-to-bottom self-driving vehicle platforms built on NVIDIA hardware and software. Kress said. NVIDIA laid out its latest plans for autonomous cars at SAY last month, including a focus on rider-hailing services and new in-car experiences involving augmented reality. Based on Thursday's commentary, we may see NVIDIA's auto business struggle a bit before they realize any gains from their plans for the future. The Xavier processor, a chip with 9 billion transistors that NVIDIA calls the most complex system on a chip ever created, is expected to eventually drive its automotive business. It will act as the heart of its NVIDIA Drive ecosystem, a platform it has developed for car makers to use to create safe self-driving cars. NVIDIA chief executive Jensen Huang told analysts that he believes the really big revenue from automotive will begin in about 2019 to 2020, when automakers, startups, taxi companies, ride-hailing companies and others begin to order self-driving capabilities in their vehicles and fleets. He revealed that the brains for self-driving cars will sell for an average of about $500 to $1,000, while those for robotaxis, as NVIDIA refers to autonomous rider-hailing vehicles, will command several $1,000s each. The upside for NVIDIA's automotive business is expected to come from software, bigger volumes of its chips, and for self-driving cars. Stacy Rascons, a Bernstein research analyst, wrote in a recent note that he expects growth in automotive to come from software development agreements related to autonomous driving at some point this year, he said. Investors who have bought into NVIDIA are reaping rewards from gaming, cryptocurrency, and a booming server business right now, but the automotive business still needs some gas. If that business is as big as NVIDIA has claimed, shares could keep driving higher.